when I never met her, but I'm just was talking to her, and she's like, I filed along with my friend, and then I realized I had lost like $400 less. I had claimed the refund $400 less. I don't want you to lose any refund. That's the only reason, okay? But you're confident, go ahead with it. Nothing better than that. But you have to do some kind of research. Only classes of 4 weeks is not enough. I would say that do some more research as well from your end. All the information is available handy. Okay, so there are broadly speaking two kind of credits, that is refundable and non-refundable credit. Okay, now refundable credit, as I think we got some chat sharing as well by Vani and Lai, that what is refundable credit? Credit which we can claim the amount for. Okay, non-refundable credit are credit for which we cannot claim the amount, but that amount will help us to reduce our tax liability. Okay, so minimum rate applied for the base, as I showed you, is 15% for 2019. Some credit has income threshold. Yes. So like say, for example, if you are talking about EI or CPP, there are certain credits which have income threshold. You cannot claim above certain percentage. So there is a maximum threshold. Quite provinces have similar credits. Okay, so now we will be doing the, or we will be learning the credits. Now, as and when I ask something or we are talking about it, try doing some research so it will be easy for all of us to understand how exactly we can do the credit thing. Okay, everybody be with me and everybody be on a continuous chat so that we can share the information with each other and we can get to know some more information. Okay. Now, personal tax credit. I'm sure we all are aware that there is something called as personal tax credit, which we can claim it, and there is some amount as well of personal tax credit which a person can claim it. So, do you want to do some research about the personal tax credit, everyone, or anyone? Personal tax credit. How much is the personal tax credit can you claim for? If you guys know that there is a credit amount for both provincial as well as federal personal tax credit. So very first, non-refundable tax credit. You know now what is non-refundable tax credit, right? The credit for which you cannot claim the refund for, but you can claim that kind of credit and reduce the amount of tax liability. So suppose, for example, I was just trying to say you like this. Suppose now you already have a tax amount liability of 18,141 during the year. Okay. Now, if you have a non-refundable credit, that is personal credit, okay, of 12,069 calculated at 15%, you can reduce that amount. You cannot ask the refund of $1,810, but you can claim that amount and you can reduce your tax liability and you can pay only 16,331. Of course, you have non-refundable as well, so you can do that as well. But just trying to say that this is non-refundable tax credit for which you cannot claim the amount, but you can help reduce your tax liability. Suppose your amount of suppose for example your amount for refundable is, I'm just trying to bring up here. Okay, suppose your amount out here is your refundable tax credit is, I'm just assuming that it is $5,000. Okay, and your basic personal credit comes across, this is only one credit which is added up. There is a list of credit. I think there are like almost how many, more than 24 or maybe 30 credits what you can, or more than 30 non-refundable credits if applicable can be applied. So everybody is not eligible for all the credit, but there are more than 30 credits available. So if at least couple of credits are applicable, and suppose you are able to claim 7,000 amount for personal tax credit after 15%, in that case you cannot claim $2,000. You just have to mention this amount as zero. Okay, because this is non-refundable. You're not meant to claim the refund, but you can reduce your tax liability. So in this case, you're not meant to pay any federal tax. Okay, in that case maybe provincial also it will reduce it, and then you will have a heavy amount of refund from the, because you have paid a good amount in the income tax deductions. Okay, guys, make sense?
Yeah.
Okay, good. Okay, so let's go further. Personal tax credit. Some inputs on personal tax credit. Anybody? it's okay. Take some time, because if you do some research and you come across and you speak, you'll remember that forever. And that will help us to, have a good discussion as well. And these are all an interesting credit, okay? At the end, I will send you some questions as well, so we can do some calculation post-lunch.
That's non-refundable tax credit?
Yes, these are personal tax credit is a non-refundable tax
All
credit.
taxpayer can claim a basic non-refundable tax credit for their income tax,
Okay.
known as the personal amount.
Okay.
It is adjusted annually to allow for inflation and other factors.
Okay.
But in 2019, the personal amount for federal taxes was like that, 12,069.
Very good.
Each province and territory also sets a personal amount for provincial or territorial taxes.
Yes.
That's
very good. Thank you so much. Is there anything else you want to speak? I don't mind.
That's it.
That's it. Good job. Good job, Rex. Romil has also written something. The basic personal tax credit is calculated by multiplying the tax rate to the lowest tax bracket. Okay, this is something which he's talking about. Okay. Anyways, so you guys are pretty much anyways, 1% or 2% have shared it, so we go further. Now, every individual can claim a personal tax credit. This is a non-refundable personal tax credit, and every individual can claim that amount. And the claim changes every year because of the inflation rate. That's the reason it is adjusted. Okay. So if it is adjusted, so this for 2019, the amount of personal tax credit was 12,069. Okay. So how do you calculate it? If you are single, you are eligible for 12,069 of federal tax credit. Provincial will have another amount. I think provincial, if you see the form, it's already written there. So provincial is 19,000 something. I don't remember exact amount, but it's there in the form. So it's 19,000. So 10% on 19,000. Okay, I think it is 369 for 2019. So 10% is you can claim 1,937 as an individual on the personal tax credit. Now we are talking about the federal non-refundable tax credit. Okay, so for federal non-refundable tax credit, you can claim the amount as an individual of $12,069. Okay. Now, if you are married, how does that work? So in that case, individual with a spouse or common law partner. Now, both of the person can claim, okay? If you are an individual and if you have a spouse or a common law partner, both of can claim your amount of personal tax credit of 12,069, okay? However, for individual with a spouse or common law partner, apart from you can claim both of you, even the individual can claim an additional amount, okay? How much with an individual and can claim an additional amount? So suppose, for example, I'm just going to write it here. Okay. So suppose, for example, okay. So there are like X and Y are husband and wife, okay? So now X can claim an amount of $12,069, okay? And then 15% will be calculated. That's the amount of claim. Y can claim. So Y is the wife, okay? Now Y is the wife who can claim $69 as well, okay? Now both of the individual can claim, but now one of the spouse, like suppose X income is higher than Y and Y income is lower than 12,069, or yeah, it's lower than 12,069. So suppose X income is whatever. Now during the year, if we are calculating the income tax return for X, so X can claim $69 as well. X can also claim a spousal tax credit. Okay, guys, be mindful about this. I'm sure people who are having wives, okay, or a husband and whose pay is less than 12,069, okay, so they can claim this amount. In this case, well, I can just put, okay, X can claim 12,069. Apart from this, X can also claim 12,069 minus, suppose the spouse income is this is X claim, okay? Now, suppose a spouse income during the year is 4,500. What is the balance amount?
8,000.
4,000 is very less, right? We'll put it as, okay, yeah. Anyways, it's okay. 4,000, okay. What is the amount, sorry?
8,109.
8,109. I trust you and we go with the amount, okay? So the personal tax credit, well, of course, this will come in another box, but personal tax credit, what on spousal personal tax credit, an individual that is acts as an husband can claim the total of how much? 12,069 plus 8,109. So that's 20,000.
Miss Fatima, the 12,069 minus 4,500 is 7,600.
See?
7,500.
Rachel,
5,000. 7,500.
7,560.
69.
okay. Was it Rachel who gave me? I said I trust you and I go with it.
569.
Yeah, I compute 3 times.
Me too.
Okay. Thank you. No worries. I think she need a coffee or tea now.
Yeah, 7,569.
See?
I compute 3 times. I thought I'm wrong.
Okay, guys. So now a personal tax credit. So X can claim a personal tax credit for himself as 12,069. However, Mr. X as a husband, if his salary is higher and if the wife's salary is less than 12,069, he can claim additional 7,569, 15% on that. So the claim will be like 15% calculated on that. Okay, both. That will be the amount which you can claim it. So if you and your husband, or if you and your common law partner, okay, you're living together in a relationship, then one person can claim a spousal tax credit as well, guys. And that will be like recorded in a different line. Like initially there will be a line. Now I'll show you one again, just for your information, so you don't get confused with it. But I really wanted to show you, and that's really interesting. Okay. So now this is the income tax credit form, okay, non-refundable. Okay, so now see, you can see on the top, it's non-refundable tax credit. For your information, 2019, the form is changed, okay? So initially there was Schedule 1 separately, now Schedule 1 is merged with the main form itself. Okay, so see, you can see basic personal amount. Claim is 12,069. You already given there, right? So if you are an individual or your spouse, you can claim that amount. Now, if you go online, this is considered as a line, okay? If initially there were just 3 digits, now there are 5 digits. So 30,100, there's 30,000, 30,300. So we say the line. So this line on 30,300, this is spousal or common law partner amount, okay? So you can claim. So you have a schedule which you need to finish it. If you have a look at the schedule, you will get an idea how do you finish or how do you complete that. But that's okay. You can have a look at your personal time. But this is the amount where you can claim an additional spousal credit of whatever calculation I did it. Like whatever amount you can claim is 12,069. An additional amount of spousal credit you can claim is suppose 12,069 less 4,500 as we did it, right? Less 4,500. What is the balancing amount? And 15% on that. But you don't calculate 15% right away because you calculate the 15% after adding up of all, right? So you just go with the initial amount. So in that case, you can calculate and only one person can, both of the person cannot claim. If I and my husband both are there, I cannot claim a spousal credit, and he cannot claim a spousal credit if both of our income is less than 12,069. Okay. But one person can claim a spousal credit, and one person claiming the spousal credit will be the amount of claim less his spouse's net income, and whatever is the balance amount you just put here. Okay, guys?
Okay.
So that's the amount of spousal credit you can claim it. And that's the amount you insert in line 30,300. So initially you claim, like initially the basic personal amount is the same. The basic personal amount, whatever you claim is like 12,069 for both of us. Even in suppose if my income is less than 10,000 or 12,069, okay, and his income is less than 12, his income is higher, okay. So even he can claim 12,069, I can claim 12,069 in both of our individual return. But apart from that, my husband can claim, or anybody, if the wife is having a higher income, so a spouse can, an individual can claim a additional spousal credit. So you can claim that additional amount. So to that extent, your amount of tax liability will reduce. Okay. Stop share, and then we go to the PowerPoint. So that will be the amount of spousal credit. So I would like to read a little bit so you can get an idea. Individual with a spouse or common law partner, basic personal credit plus spousal credit. For individual with spouse or common law partner provides for 2 credit, one for individual and one for his or her spouse or common law partner. And the basic amount is 12,069. If individuals, like now there are 2 situations in this case, because you could see that there is an amount of 22 to 30 as well. Now what is this amount, guys? Might look a little bit, okay, what is happening. You don't have to remember all this thing all the time. It's very easy. You go to the form will give you all the guidelines. You refer to the website, it's all easy. But it's just important, information is important, because when you are going to file, you should not lose any credit. You should not any lose. If you're eligible, look at your eligibility. Okay. And might as well, some people may be aware about it, but some people might not be aware about the basic credit. Yeah. Okay. Next one is, if the individual spouse is not dependent. Okay. Now both of them, husband and wife, both are together, living together. Wife's pay is less than 12,069. If both are living together, and if wife is not dependent on husband for any reason, any physical or mental or health reason, she's not dependent, she's working. In that case, I showed you before the calculation, we use that calculation. Okay. That you can use 12,069 and additional credit is deduct the net income, whatever is the net taxable income of the wife, and then you just deduct that amount, and not the taxable, the net income of the wife, and then you deduct it from 1269, and that is the balancing amount credit, you get it. Suppose now wife is having a physical problem, physical health problem, or a mental health problem, and she is dependent on husband, but she's still working. Okay, she's still working, but she's still having a mental and physical, and that's the reason she's dependent on husband. In that case, okay, a husband can claim a spousal credit of additional amount of 2,230. So apart from 12,069, and wife can claim, a husband can claim $2,230 and 15% on that. Now I would like to show you a schedule so that becomes very, very clear. Is it schedule 5 what it says? Yes. So you can see what the schedule is all about. And I'm not going to go through individual all schedules for your information. Oh, stop the share. But I might go with a couple of schedules which I feel I really want to show you. Rest all, you can just do some research. Okay, see, this is a schedule. Can everybody see this?
Yeah.
Okay, see, this is a schedule. Schedule 5. Now, if husband and wife are living together, so for personal tax credit, husband is able to claim 12,069, wife is able to claim 12,069. Now, wife is dependent or independent in terms of health-wise, okay? So in that case, they will try to, and this is all information is provided in your tax form. They will say, refer to this schedule, okay? So now you can see this. Spouse or common law partner amount, okay? So how much is you can file or you can claim the amount for your spouse. Suppose you are earning $50,000 and your wife is earning less than $12,000, just 4,500. So how are you going to claim the amount of spousal credit? So you have to fill all this information, whether you are in relationship or not, and the base amount is 12,069. Okay. If you are entitled to Canada caregiver amount for your spouse or common law partner, enter 2,230. In this case, if your wife is dependent physically or mentally, health-wise, she's earning, but then she is also dependent on you, and you are spending some money, you're spending some time, you are taking care of her. In that case, your credit will be increasing. So apart from 12,069, you will be entitled to an additional credit of 2,230. So your total amount of credit will be 12,069 plus 2,230. So how much does that come to? Is it 14,299?
40,299.
99. Yeah. Less
Yes.
whatever is your spouse income, 4,500. So balancing amount, you calculate the 50%. Okay. So see, it is so self right? All the information. You don't have to worry about it. If you are entitled to Canada caregiver, fill in. If you're not entitled, just leave it. Okay. And then see if you see the line 4. Spouse or common law partner's net income. So whatever net income is your spouse, okay? So 12,069 plus 2,230 less whatever is the amount of your income, 4,500. What is the balance? That balance will be the amount on which you will calculate your tax credit, additional spousal tax credit, okay? So that is the amount we're talking about it. So make sure if a husband and wife are living together or if they're common law partner, and if the salary or the net income is less than 12,369, you can calculate that. If the amount is negative because the salary is higher or the pay is higher, in that case, you just have to mention it 0. You're not eligible for any amount. Okay? Make sense, guys? Everyone?
Yes.
Yeah? So personal tax credit is clear that you are individually eligible to claim 12,069. Apart from that, if you are into relationship, you have your wife together or a husband together whose salary is or whose pay is less than 12,069, you can claim an additional amount of spousal tax credit. If a spouse is mentally or physically having a health problem, weak or any other problem health-wise, and she or he is dependent on you, then you can also claim an additional amount of 2,200.
2,230.
So 15%. So amount you can claim is if she does not work, if she does not have any pay, okay? In that case, you can claim $2,145. Like you have to deduct the net income. But suppose if she does not have any net income during the year, it's okay. And you just claim 12,069 and 15%. And in that case of infirmity, that's so this is the amount of personal tax credit. So guys, that was all about the personal tax credit. Anything you have to say?
Lots to learn.
Exactly, right? And lots to research. Guys, I would say, because you know what? One class or 2 classes are not enough to learn everything. You know, you need to do a lot of research. Every item has so much detailed things, you know.
Yeah, it takes time.
Yeah,
learn.
I know. I mean, if you go for an income tax course itself, I'm just giving you a hint up. In H&R Block, it takes like 3 months for the basic course. So you can understand that people are spending like 3 months out there. So you also need a lot of time. It's just that we are learning the basic thing. Just a tool that how are you going to navigate where, okay? So we are not trying to learn every lawyer because we cannot learn it realistically. You have to do, yeah?
Yeah, it's just like introducing to us. But
Exactly. You need to know exactly how does it work. Like how do you calculate federal tax? What are the non-refundable tax credit? We cannot go to individual item in the federal tax form or provincial tax form and calculate and learn everything. Well, in that case, what is applicable, you need to research more about it.
yeah,
But then the best part is at least you know that how the form looks like, how the calculation happens, what is the thing you can claim and what are the things you cannot claim, or what are the things where you can earn the refund. So in that case, at least that makes you familiar with it, how you can do it. Okay? Yeah. Let's go further. So now, see, that's what we talked about. Spouse or common law partner. Income Tax Act 118. So you know what the best part is? Everything is given in the Income Tax Act. If you remember, I showed you one website where you can go through it. And if you remember, I have emailed you in the very first part itself, the federal tax guide. In the very first class or the second class, I've emailed you a couple of handouts, you know, federal tax guide for the individual. Every detailed information is given in that as a guidelines. So look at that form, guys. Guys, have a look at it. Take some time to read that PDF. It's not to just stay in your saving drive or in your computer. If you're really interested, and this is not something which is we are doing it for business, but it is very important for ourselves as well as in health. Even if we don't file it individually, if you go outside, we can always ask questions to them. You know what? Sometimes, the people who are filing your tax, I will just try to give you an example, because I was just talking to my husband the other day, and we were just talking, and there is one student, okay. I got to know, I was talking to one student, okay. Regardless, it's not about your batch or any other batch. I was just talking informally with another students long ago, and he used to say that he instead of getting a refund every year, he makes a lot of payment to the income tax department. So I was talking to my husband that how a person can make so much of payment to the income tax department, because generally everybody and maximum people are claiming refund, So you need to be smart enough to claim the refund rather than making so much of payment. So my husband was telling me, so there are like, some people who say that we will just charge very less amount and we'll help you file a return for you. In that case, you know what, they don't think much about it. They just go with the basic stuff. And sometimes you don't ask a question, right? Because we don't know anything. We just say, do whatever they say. So in that case, ultimately we have to make the payment instead of return. So refund. So try to know at least what are the items available for refund. So even if you ask anybody else to file for you, you can question them, you can ask them, you can tell them to research, because you're paying them, you're not doing it free of charge, right guys? So make sure, so make sure
They're
you
in a hurry to do it.
Yeah,
they're in a hurry to do it. Just
because they are just charging like less money. They say I'll charge $20-$30 and just $20-$30, like they just want to finish it in like 15-20 minutes, and they don't want to take too much of time because they're used to doing that.
Miss Fatima,
line up.
Miss
Sorry?
Fatima, I noticed though that if the one who prepared the income tax made the mistake, the CRA will correct it.
Oh no, I'm not talking about the mistake, but you know what? I'm talking about if you don't want to claim it, everybody is not going to claim that non-refundable. Nobody is going to focus much on non-refundable tax credit unless and until you give some additional information. You know what I mean?
Mm-hmm.
So that's where CRA will not look into each individual whether they're eligible or not. You know what? Well, they will just try to, if something pops up, they will do it. Otherwise, they will have so many files to them, right? 30 million files with them. So they have lots of stuff. But if something pops up in terms of mistake of like the income, employment income, or any other mistake, they will correct it. Even if you're trying to, like, if anybody is trying to take undue advantage of it, they will try to figure it out quickly. But they will not go too much into detail with anything else, right? They will not try to find out whether you can claim some more thing or not, or you can. Some cases there can be very apparent, like personal tax credit. This is very apparent that everybody is eligible for it, right? And if it's a husband and wife, and if you're filing it as a combined return, they know that is a combined, so you would be eligible for some kind of additional spousal credit. So in that case, they might help you out, but not always and not in every case. So that's where you need to be mindful about.
Yeah, it depends. Yeah.
And you don't have to trust that. You don't have to be dependent on that, because they also are having a busy schedule and busy thing, right? So basically you are filing it. So, well, we need to be mindful about it. Oh, sometimes we make a mistake unknowingly, it's okay. But now, because when we know how to do it, even if we don't know everything, but we know the basic thing, you can always question them. You can always research before going. I know, guys, sometimes we get so lazy with researching, but guys, research is the best tool. If you research as and when you research more, you know what, you learn more. Every time you research something, you learn an additional thing, and that will be helping out you. So try to research as much. Don't be dependent on just limited information, because everybody is learning and everybody is researching, right?
Yes.
So yeah. Okay, guys, let's not get too overwhelmed with this. Let's go further. Otherwise, I'll say I want to sleep in Mexico.
I got a headache now.
Yeah, now she wants to sleep in Mexico.
Computing all
No,
night.
you don't have to worry about
The receipt.
The receipt? Okay. Guys, maintain your receipt, okay?
Yeah.
Maintain your records as much as possible. Yeah. Okay, guys, let's go further. So I already mentioned about spousal or common law partners. We are not going to go with every non-refundable credit, but maximum one. But if something we misses, you got to do some research about it. Okay, but now you know what are the non-refundable credits. Okay. Now, personal tax credit, as we are discussing here, that if healthy, you just have to claim 15% on a spouse income, net income deducted, and 12,069 less net income and 15%. If wife is mentally or physically impaired and is dependent on you, and if she's still earning, then you can calculate 12,069 plus 2,230. It's already given in the schedule. You don't even have to remember the amount, guys. Everything is given in the schedule. Less net income of the spouse and 15%. Yesterday I got a call from HNR block because last year my husband filed in, and this year because initially we already filed it long ago, guys. So when we filed in, we got a call from HNR block, and they're telling me, you have not filed your return for 2017 and 2018.
Oh.
They're asking me. He's like, I was just noticing, and I said I was not there in Canada. How do I file it? I just came in 2019, So I was like, I already filed back in Australia my return, and they're like, oh, okay, fair enough. Then that's okay. You know what? Because they must be having some audit as well, right? So they do talk about that. Yeah. Okay, guys. Maximum is 1810 or 2,145 for the impaired one. Okay. Now, if at all you are claiming a personal tax credit for a spousal, for the spousal, as we mentioned in the before, spousal or common law partner. Okay. In that case, you are not eligible to file a tax credit for amount for eligible credit. Okay. Now this is amount for eligible credit, independent. So suppose if you have already two individuals, you have a wife or a husband, and you are claiming an amount of 12,016 and an additional spousal tax credit of balancing amount. Okay, in that case you are not eligible to file a tax credit for eligible dependent. Now, who is eligible dependent, and what are the terms and conditions? It's very important to know. Okay. So who is an eligible dependent? What are the terms and conditions for an eligible dependent? You got to do some research and tell me. Tell me amount personal tax credit for eligible dependent. Do some research. I'm going to go individually along with the research. There's not much of difference, but there are certain situations or conditions you need to meet, and you can claim the amount. That's the only thing. So try to do some research for eligible dependent. Personal non-refundable tax credit for eligible dependent. I'm getting some water from that. Okay. I think I'll go ahead with it. Do some research, but I'll go ahead with it. Now, if at any time in the year you supported an eligible dependent and their net income were less than 12,069 or 14,222.99 if they were dependent on you because of impairment or in physical or mental function. If you have not claimed an amount for the year for your spousal credit, you may be able to claim this amount for the one dependent if any time in the year you meet all the conditions. So if you are supporting somebody who is an eligible dependent, okay, now we are going to go with the list of eligible dependent. So if you're supporting somebody who's an eligible dependent and whose salary or whose pay is or whose net income is less than 12,069, if he or she dependent is healthy, but if dependent is physically not healthy, and if his or her pay is $14,299 during the year, then you can, and you have not claimed the spousal credit. In that case, you can claim the amount for eligible dependent if you fulfill the following condition. Now, okay, now you did not have a spouse. The first condition is right. You did not have a spouse or a common law partner of you did, or if you did not, you were not living with the supporting or being supported by that person. So you are not married. So the very first condition is that you are single, divorced, separated, widow, or supported dependent. Okay, and you supported a dependent. So if you are not married, because spousal credit can only be claimed when you are married. So you cannot claim this because you have to be divorced, single. Even if you're married or something like that, or even if you are already separated, okay, and that person is not supporting you anymore, or you are not supporting that person. So that's where you can claim the amount for eligible dependent. You supported the dependent in 2019. So this eligible dependent you are supported in 2019. You lived with the dependent in the home you maintain. You cannot claim this amount for the person who is just visiting you. So you have to live with that person, and you have lived with that person, and you are supporting that person in the house in which you living it. Okay, he or she should not visit you just. And in addition, dependent must have either be your parents, your grandparents by blood, marriage, common law partnership, or adoption. Your child, grandchild, or sister by blood, marriage, common law partner, or adoption, and was under 18 years of age or had an impairment in physical or mental functions. So all this is where you are eligible to claim a eligible amount, where you are not married, where you are supporting where you are supporting a dependent. A dependent is living with you all the time, and the dependent is related to you by blood, marriage, or adoption. Okay, so in that case you are eligible to claim certain amount. Now what is the amount you are eligible to claim? Now if you want to have a look at the details, you have to go to schedule 5 again, where it mentions every details about it. Okay, now the amount you can claim is, if the person is healthy and is dependent on you, you can claim 1810, that is 12,069 less the amount of whatever is their net income. I'll take you to schedule 5. Okay, if the person is unhealthy, you can claim this impaired if it is the amount is if the person is unhealthy. Okay, now that's something which I will take it to you to the schedule. Okay, so in that case we can just have a look at it, that how does we look at the schedule. Now see, this is the schedule. Okay, so amount for an eligible dependent. So you have to fill in the amount in line 30. So if you have a spouse, you fill in on line 30,300 in the main form. But if you are not eligible for a spouse because you are divorced, you are not well, I'm talking about the taxpayer. Okay, so the taxpayer is divorced, single, and is helping or supporting the dependent. Okay, in that case the taxpayer is actually eligible to claim the amount for an eligible dependent. So now we have to fill in the details about the information about the person, relationship with you, is this dependent mentally or physically thing, and then you have to calculate the base amount same way as you calculated in the as you don't have to calculate it, the amount is already there. Okay, and then if a person is physically impaired, that means you are doing some Canada caregiver amount of 2,230. So that comes to 14,999, right? 299, something like that. Yeah. And you have to add this amount. And if dependent income, you have to find it out from this line of the return. That is your net income. So if it is less than 12,069, 12,069 or 14,000, whatever amount we mentioned it, 14,299. Just deduct that amount, and whatever is the balance, 15% on that. So that is the amount you can claim on the amount for an eligible dependent. But you can either claim on line 30,000, that is spousal credit, or you can claim for this. You cannot claim both. Why? Because if you want to claim amount for an eligible dependent, you cannot be married, or you cannot have a relationship in terms of having a spouse. So in that case, you cannot claim the spousal, because in spousal or common law partner, you have to be married. You need to have a spouse whom you are supporting or not supporting. Yeah. So you can either claim one of those. So you need to be mindful about that, guys.
Oh,
Yeah.
cannot double.
Yeah, you otherwise people will take so much of benefits
That's what people want.
Yeah, right. They just want to find the loophole and just try to, you know what I'll tell you. Very recently, I think there was some international. I think government had announced $1,250 for students as well, right? But not everybody can claim. It's just the student who is international students, right? Because CERB already gives $2,000 to normal people, to the people who are working. So I think other people cannot claim 1,250. Otherwise, it will be like too much amount, and government will go into deficit if they're going to give every amount to everything, right? So there are people who are trying to claim everything, and that doesn't work out, guys. You need to be very careful about that.
They're gonna get it back after 8 months.
Right?
At
I mean,
least.
you know what? I was reading, like my husband was telling that he was reading in the news that government is now going to be strict with CERB as well, CRB. They say that because if they give $2,000 monthly, and people who are doing part-time jobs, there is no motivation for them to work part-time. So they want to leave the job and get the CERB and just enjoy the life.
Yeah,
Yeah.
some are doing that. They're absent for 2 weeks.
Yeah.
So,
So
apply.
Yeah, so in that case, government says that this is not motivating people to work, and in that case, if the economy opens up, that will not motivate them, right? So that's a difficult time. See, so many things to talk about and so many things to think about, right? When government takes so difficult decisions, Anyways, so that was all about amount for eligible dependent. Just to let you know, this will be one of the questions for your assignment: amount for eligible dependent. Anyways, now the next question, now the next claim or the non-refundable credit is Canada caregiver for a child. So, so the disability, the Canada caregiver for a child. Now there is no general tax credit available for a child who is under 18 at the end of the taxation year. Somebody is making noise, guys. Okay. So there is no general tax credit for a child who is under 18 at the end of the taxation year. If the child is healthy and under 18, there is no credit, no non-refundable credit for that child. Okay. However, in cases where an under 18 child has a mental or physical infirmity, that is like this one, mental or physically impaired. So, Income Tax Act 118 of B.1 provides a credit based on 2019 base an amount of $2,230. So, for a child who is mentally not very healthy, okay, or physically not healthy and is dependent on the parent, okay, in that case, you can claim a credit, non-refundable credit for one child is 2,230. And 15% so maximum amount you can claim is $335, okay, for one child. So in that case, so in those credit where the credit is claimed, so this is something which you need to be aware that a child who is under 18, you can only claim if the person is not healthy. If the person is healthy, you cannot claim for that person. Okay, guys?
Okay.
Yeah. I feel as if I'm just teaching to Eleanor. I hope everybody is listening to me.
They're just quiet.
Very quiet.
We're listening.
You listening? Good
We're
job.
in here listening.
We're listening.
Lots to think, that's why.
Yeah, I know.
Overwhelming for us.
Overwhelming. So you were not much aware
Because
about
there's a lot of things to memorize and to think.
Yeah, you don't have to memorize
Just-
everything.
Just
Yeah,
analyzing.
a lot of things to do, something like that.
Yeah, you don't have
Yeah.
to memorize it. What I can say is you just have to refer to the form all the time. So
Yeah.
if you look at the form and you do some research, you will get to know. Because remember, of course, you should be aware that you can claim or not claim,
Maybe easier.
Yeah, that's the easiest thing. That's the reason I've sent you everybody the form. So if you really have time, you can always refer to that. And that's the best thing ever, right?
Yeah.
This
Yeah.
is for life. For life to do.
What?
11 hours.
What is that?
What's
Wow,
that?
another hour. Break time. Lunch.
No, another. you
That's
are so bad.
Is that automatic?
That's your alarm. Ma'am, that's your alarm.
That's an alert. So that's an alert that you need to finish quickly, right?
Another hour.
Yeah, I know. How bad.
That's
Okay,
yours.
now let's go to the next one, guys. So now there is a credit available for if you were born in 1954 or earlier. So if you're born in 1954 or earlier, the maximum amount you can claim is 7,494. See, this is the one. Now there are certain conditions which I would like to take you to the schedule, but yeah, so you have to refer. It's written in the form as well. Refer to the worksheet, okay? So now you need to be very careful about it. So I'm going to take you to the worksheet again, but the maximum amount if you are reached 65 in the year, okay? Or if you're born in 1954 or earlier, you can claim a maximum amount of 7,494, 15% on that, okay? There is certain conditions with that. So I would like to take you to the worksheet and we will see what exactly are the conditions. How do you calculate it? Guys, the calculation part, the best part about the calculation is that it gives you everything handy. That's where the handy thing is when you use the software, it takes you everything handy. Now see, now this is the worksheet, okay? I've already emailed to you, but this is a worksheet. It's the amount. Refundable. Federal allowable medical disability. I hope this is the one. I think this is not the worksheet. Is that the worksheet for the return? It says it's the worksheet, so it has to be the worksheet. So, well, give me a second. Okay, it should be here. Okay, so there are two worksheets, basically. Oh no, that's the same worksheet. Age amount. So if you don't know where exactly, there's always a line given, and the line is already given in the in your income tax return form as well. Okay. So the amount line is 30,900 age amount. If your net income at the line, like they're just mentioning to refer to that, of your return is 37,790. Okay. This is, I'm talking about the age amount if you're born 1954 or earlier. If you're eligible for that, and if your net income is 37,790 or less, you just have to enter this amount, 7,494. Don't have to do anything, okay? If your net income is 87,750 or more, then you have to enter 0. You're not eligible for this credit. However, if your net income is between 37,090 and 87,750, in that case, you have to fill this form. And you will be eligible whichever is the lesser amount. So maximum claim you can make is 7,004. Now, if I go to line 2, okay, if I go to 2, the net income is suppose 50,000, okay. So you mentioned $50,000 here. Base amount is 37,790. So what is the balance amount? Now you have to multiply by 15%. So what is the balance amount? And if the 15% is whatever is the amount which is after you deduct it, that is the amount which will be. If it is higher, you have to mention 0. But if it is lesser, you just deduct it, and that amount will go to the line 30,100. This is especially for the age amount. So people who are born 1954 or earlier, so you can just work around that, and you can try to get a refund with that. Okay, sorry, refund, non-refundable credit. My bad. Okay, so see, if you reach, you can claim 7,400. 15% of the income, if it is greater than 37,007, gone when the income reaches 87,750. So you are not meant to get any amount of refund. Okay. So that's with regards to the age, and you can claim a non-refundable credit for age as well. Pension income, guys, you can also claim a pension income. Now, pension income is basically for the people, of course, for the 65 years or who have started receiving their pension income. Now, what is the amount of pension income? Is 15% of the first $2,000. So the pension income credit is equal to 15% of the first $2,000 of the eligible pension income. So if you receive the 2,000 pension income, first 2,000, you are eligible for 15% of the credit. That is 300. Now that is not indexed. What does not indexed means? It means that it doesn't changes every year. It is like 2000 is the threshold for since 2006. It doesn't changes with the inflation rate. Indexed is like changing with the inflation rate. Okay. So now the credit is only available with respect to eligible pension income, but they don't include the following pension income. Okay. Payment under old age security or Canada pension. I think they mentioned it here. Oh, they have not mentioned it here. Okay, I'll just speak up. Payment under certain provincial pension plans, payment under salary deferral arrangements, payment under retirement compensation arrangement, payment under employee benefit, death benefit. So you are not eligible if this is not an eligible pension income. Now, for an individual who reach age 65 before the end of the year, credit is available on pension income, which includes periodic payment from RPP, that is Registered Pension Plan, an annuity payment out of registered RRSP, payment out of RRIF, an annuity payment from deferral profit sharing. So these are all including in the pension income. However, individual who is under 65, okay, in that case, the periodic payment from RRSP where it's eligible amount. However, if you die, if you are under 65 and if the taxpayer dies, then whatever other type of pension income what that person is received as a consequences of death or a person, okay, if you or dies, okay, the spouse or other person will be, so any amount non-refundable tax credit of 15%. So that's the pension. You don't receive most of the non-government stuff what I mentioned it, but you don't receive the most of the stuff what I mentioned it, right? And then you receive if you are less than 65, you receive RRSP amount resulting from death of the spouse. Then also you receive that. Okay. No CPP, no old age security or provincial QPP is applicable to that, guys. So that's the pension income, non-refundable tax credit. Canada employment income, regardless of anything, if you are working and if you're generating employment income, you are eligible for Canada employment income. Okay, of $1,222. So guys, if I actually ask you to do some problem, or if you yourself are working and if you're filing a tax, okay, you can always directly closing your eyes, just put 1,222. It's already written there. It's already given the threshold and everything out there. That if this is basically the amount which is given to by government to just give some relief, because if a person is working, they might have some kind of cost associated with employment income. So to generate the employment income, so just get some relaxation, government of Canada has given a non-refundable tax credit of 1,222 on the employment income. So this is applicable to all the person who is working. Okay, any person. If you're filing, so make sure when you receive your tax summary, if you've already filed in, check in your tax summary whether your accountant has filed the tax or whosoever has filed the tax is entered this amount or not. You will be eligible if you're working. So if you have an employment income, yes, you will be eligible for this. There is an adoption expenses. Okay, a person who is adopting a child under 18 years of old is eligible to get a non-refundable tax credit of $16,255. This 15% is that. So adoption expenses tax credit is available to a taxpayer who adopt an eligible child. Now, who is an eligible child? Eligible child is a child who has not attained the age of 18 years at the time of adoption. Okay, so that is like recognized by the government of Canada, and the maximum amount is $16,255. Now, this amount keeps changing every year because of the inflation rate. Okay, and the maximum credit, non-refundable credit available is 2,438. So yes, the expense can be claimed in the year in which adoption is finalized. So there are certain kind of rules applicable in terms of adoption expenses. So yeah, you can have a look at it. I will read a little bit what are the expenses including adoption expenses. Fees paid on adoption agencies licensed by the provincial government. court cost and legal administrative expenses related to an adoption in order in respect of the child. Reasonable and necessary traveling and living expenses of the child and adoptive parents. Document translation fees. Mandatory fees paid to a foreign institution. Mandatory expenses paid in respect of immigration of the child. Any other reasonable expenses related to adoption required by provincial government or adoption agencies. So any expenses related to the adoptions are included in the adoption expenses. Now, adoption period generally begins at the time of application for registration with provincial ministry, and then it ends at the time an adoption order is issued by recognized by the government of Canada. So a child will be adopted by a couple either legally married or cohabiting or a common law basis. The legislation points out that both the parties are eligible for credit. However, there can only be one claim made. If both the parties are taking care of the kid and they have adopted together, but only one person, and then they can split. So they have to decide it. But only one person can claim the amount of adoption expenses. So that's a good amount of credit what you get it if anybody is planning for an adoption. Okay. The eligible child has not attained 18, issued adoption order. Expenses are fees or agencies, court and legal fees, reasonable travel costs, mandatory fees related to immigration, other reasonable expenses incurred after adoption is open. Adoption file is open. Home accessibility. A taxpayer will be qualified to get a non-refundable tax credit for home accessibility, but there is only a qualifying individual who can get this kind of tax credit. Now, who is the qualified person? A qualified person can be an individual over 65. That means a qualified person is a senior. Okay. Or a qualified person is an eligible for disability tax credit. Means a person who is with disabilities is eligible for the home accessibility tax credit. So there are only two parties which are qualifying individual. Basically, the base amount is $10,000. So 15% of the lesser of 10,000 an amount of qualifying cost. So you get a renovation. So the government provides a non-refundable tax credit for renovation that will allow seniors and persons with disability to live more independently at home. So the base for the credit is equal to $10,000 and the amount of qualifying expenditure for a year. This means that the maximum credit is $1,500. 10,000 into 15%. It does not appear that the 10,000 will be indexed. Like it will remain same, And eligible dwelling. Now, what has to be the eligible dwelling? So eligible dwelling is a housing unit located in Canada. It must be owned by the qualifying individual or by an eligible individual. Well, it will usually be with the principal of the incidence. That is not the requirement. It will usually be the principal residence of the individual. That is not the requirement though. It can be a house, cottage or condo, but it cannot be a rented dwelling. So if you are renovating a rented dwelling, you're not eligible for this. Okay. So in that case, that is the eligible dwelling. Now, who is the qualifying individuals? We have already mentioned it. What is the qualifying cost? Allow qualifying individual to be more mobile or more functional with an eligible dwelling. So the credit is available to a individual or an eligible individual for qualifying expenditure of the dwelling. Dwelling is like the house or the property, okay? So that's the amount which is applicable or the person who is eligible. So that this is only applicable for the senior. So if anybody who is attained the age of 65 above, they can, and if you are renovating your own house, you are eligible for a renovation, a credit of 15%, okay? But it has to be your own house. First time home buyer. I'm sure most of the people must have claimed this first time home buyer and must have bought the house first time and have claimed the first time home buyer credit. Yeah. Anybody want to share any experience with this? Nobody? Anybody has filed or anybody has claimed this amount of first time home buyer? Not really?
No. Yes, ma'am, Jess has claimed it already this year.
Oh, this is Mercy. Who is that?
It's Abby, ma'am.
Abby. Oh, Abby, yes. Sorry. Sorry, what did you say?
Just claimed this 750 because
you claimed, right? This year?
Yeah.
Okay. So you were
bought
there
the
already.
house last year. Yeah.
Okay. That's good. So you have already joined the Zoom.
Yeah, it's
I
been
thought you and Jessie are not here still.
no listening.
Okay. How was your birthday celebration yesterday?
No, we don't have any celebration at all. Mom. It's
Like,
just normal days. Yeah.
Did Lai get a cake for you?
No.
Lai? Abby was
But-
expecting.
No, but she gave me love. It's
Oh
okay.
yeah, I know. Her love is more waitable, right, than the cake.
Yeah.
So that's the best thing, yeah. But I'm sure when we get back to school, I'm going to ask her to bake a cake, a big cake for everybody's birthday. And then she will say, "Oh, I'm so tired."
It's social distancing, so we will save the cake later. Right?
No, you got when we go to school back, right?
Yes, we will,
Yeah.
yeah.
Okay.
Double
But
fun, right?
but you know, Lai, your words and your love is more valuable, so you don't have to worry about it. Yeah.
Yeah. I'm not guilty because she knows that I love her, right, Abby?
Oh no, nobody is guilty.
Abby.
Nobody is making you feel guilty. Yeah. But then, is Jessie pampered you or not yesterday? Jessie pampered you, Abby?
Of course, Mom. Since yesterday, since the holiday.
Oh, that's good. Yeah. Yeah. Jessie's too good, so that's good. Yeah. Okay, guys, let's continue. So now Abby is there. Lai spoke in that way, otherwise she just kept messaging. That's good. Lai, we could hear your voice. First time home buyer tax credit. Yes, as Abby mentioned, they're going to claim it this year. So yeah, an individual can claim when a couple or when you buy a house, okay, an individual can claim or a spouse can claim amount of $750, like 5,000 of the credit you get it. So that is the $750 of non-refundable credit. You can claim it. However, there are a little bit of conditions, you know. A tax credit is available for the first time home buyer who acquire a qualifying home in Canada. Who is that?
Wait lang.
Okay. The credit is equal to 15% of the first 5,000 of the cost of qualifying home, resulting into a maximum credit of $750. The amount is not indexed, means it's same. To be eligible for credit, the buyer must intend to occupy the home no later than 1 year after its acquisition. Okay. Once you get it, you have to be in the home no later than 1 year. An individual will be considered a first-time home buyer if neither of the individual nor the individual spouse, owned and lived in any other home in the calendar year of home purchase or in any of the 4 preceding calendar year. So if an individual will be considered first-time home buyer if neither the individual nor the individual spouse or common law partner owned and lived in another home in the calendar year of the home purchase or in any of the 4 preceding calendar years. So if in the 4 preceding calendar year, if you have not owned and if you're not living in that house, that means you're a first-time home buyer. So the credit may be claimed by the individual who acquires the home or by that individual's spousal or common law partner. However, for the purpose of this credit, a home is considered to be acquired by an individual only if individual's interest in the home is registered in accordance with the applicable and registration system. So you can claim a first-time home buyer. Volunteers for firefighters. Have you heard about volunteers firefighters anytime? Anybody?
Yeah, there's some volunteer firefighter.
Yeah, what happens in that? So they help in times of emergency and rescue and stuff, right? So there is a volunteer firefighters in case of they takes the call and stuff. Now, just on a lighter note, yeah, I think the fire brigade comes in if somebody's birthday is there who has a kid of 11 years or younger, and if if a senior person of 60 years or higher, if you inform a government like the fire brigade, okay, they come, they get their fire truck or they get their fire brigade and they come and then they play the happy birthday music if it's somebody's birthday, you know. I'm sure you must be aware about it. Like there is a neighborhood, there's a person in my neighborhood, their kid is like I think younger than 11 years. So yesterday there was a fire brigade which came in, not yesterday, day before yesterday. There's a fire truck which came in and they had buzzed the siren and they have sang the song Happy Birthday for that kid, you know, just to make them feel good about during the COVID time. Isn't it really beautiful gesture? So yeah, anybody can do that, if you are at the age of 60 years or higher or 11 years or younger. So yeah. Oh yeah, yesterday I mentioned about it, right? On Abby's birthday. Sorry, I repeated it. Okay, volunteers, firefighters. A credit is made available for both volunteers, firefighters, and a volunteer search and rescue worker. I'm mentioning both together. But what are the services? Now, volunteer firefighter service is basically eligible volunteer firefighter services means services provided by an individual in the individual's capacity as a volunteer firefighter to fire department. He has to be a volunteer, okay? To a fire department that consists primarily of responding to and being on a call for firefighting and related emergency calls, attending meetings held by fire department, participating in required training to the prevention or suppression of fires. So if you are actually a volunteer in helping to suppress the fire or participating in required training, but does not include service provided to a particular fire department, if individual provides the firefighting service to the department otherwise than a volunteer. So if you're not a volunteer, then you are not eligible to claim for the firefighter or the search and rescue. Search and rescue worker are also people who actually provide volunteer services that consist of responding to and being called for search and rescue and related emergency calls. So you are attending meeting and participating in the training. So all this will help you. All this will be able to help you to claim the non-refundable tax credit. But you need to work for at least if either a type of volunteer, if they perform 200 hours of volunteer service during the taxation year, then they're eligible for the credit. Okay. You can even have a 200 hours combined of volunteer search and volunteer firefighter services. But if you are having a combine of 200 hours, you cannot claim for both of the services. Okay. So an individual 200 hours requirement can take either credit.
Oh, just one.
Yeah. However, they can take both regardless of the number of the services if you are doing it together separately. But an individual meeting 200 hours requirement can take either of the credit. But if they're taking 200 together, then only one credit can be taken. That's the one.
Yeah. Oh.
Yeah. You can start doing some firefighters services to get the credit, and credit is like $450, guys.
Mm-hmm.
24. So by 8, so 8 to the 16, 8, 5. So 65 days you have to do it if you do an 8 hours of services. So almost like how much? 2 months? Almost 2.5 months, But you don't do it like a full time, right? You just do part time. So you can do it in a couple of hours, Now comes the charitable donation. Anybody who has, I'm sure people must have done the donation. Anybody who's aware how do you calculate the charitable donation stuff? I'm going to take it. It's a different process, okay? So if you see I'll just show you quickly. Just so that you know that every item will be calculated except a couple of items which are calculated differently. So one of them is the charitable donation. Oh, that's not open on my form. So let me have open it, okay? Eleanor?
Yes.
Did you eat something in Mexico?
Oh my God. How many hotels? 5 hotels free. You can eat everywhere in there.
Everywhere? Okay.
Inclusive.
Okay, that's good.
Inclusive everything.
See, we are talking about volunteers, firefighters, search and rescue, and then Canada employment, home buyers, home accessibility, adoption expenses. Then you have pension income amount. Okay. Rest we are going to talk about it. So we are still talking about it. So now let's go a little bit further. And if you see in the line step 31, okay, federal and non-federal non-refundable tax credit. After that, you have to multiply with 15%. But after that, the donation and gift is mentioned. So that means that they are not calculated at 15%. The calculation is different. So that's the reason they have added up separately. Even if you see your last year, if you have donated anything, if you see your tax summary, okay, income tax summary, whatever you receive it this year, and if you donate or last year, you will see that it will come after the calculation of the federal tax at 15%. That will be mentioned separately. Okay. Now I'll try to bring up exactly what's the reason. Now, charitable donation or anything you give as a charity, purpose donations can be in a form of cash or segregated in different categories, right? With each different set of rules. Now, well, charitable donations are acceptable if they're included the donation from the following entities. Okay, so they mentioned here the entities. Let me go to the entities. Oh, they've not mentioned here the entities. Okay. Well, you can research something, but I'm going to speak up. A registered charity, a registered. Oh, this are mentioned in the schedule. So you are not here, but you can. If you see the schedule, you will see where exactly is the in the schedule exactly. That is schedule number 9. You can see more detail about it. Okay. So charity can be a registered charity, a registered Canadian Amateur Athletic Association, a Canadian municipality, a Canadian government, a university outside of Canada which normally enrolls Canadian students, a charitable organization outside of Canada to which Canadian government made a gift in the current or preceding taxation year. In addition, a provision exists that allows the federal government. Oh, what's that? Okay. Why is my background? Update the background. I've stopped because I'm charging. Charger. Okay. Okay. So Canadian government, a university outside of Canada which normally enrolls Canadian students, a charitable organization outside of Canada to which the Canadian government made a gift in the current or the preceding taxation year. In addition, a provision exists that allows the federal government to provide a limit of 24-month registration for foreign charities that are involved in relief and humanitarian aid, provided the act are in the national interest of Canada. So now these are all the entities which are included in to be eligible for the charitable donation. Now, charitable donation are not calculated at a flat 15%, guys. Whatever donation you make, they're calculated if it is above $200. They are calculated at the rate of if it is above, because the first $200 are calculated. See, if you see the, can you see the slides? Am I on the slides, everybody?
Yeah.
Okay. So if you see the slides, the calculation has certain kind of brackets. So 15% is calculated as first $200 eligible gift. Next amount will be calculated at 33%. That comes in the B. And the next amount, 29%, is calculated in the C. Okay. And if you add up all three, will be your amount of charitable donation. Now, the first $200 of eligible gift will be calculated at 15%. That is super easy. Second one, the lesser of total gift less $200. Suppose your gift is for $500. So you have to deduct $500 less $200. So $300. Okay. Or, well, but you have to take up any lesser of this. Taxable income less 210,371. So if your taxable income is 100,000 less 210,000. So it will be 110,371. But which is the less is $300. So you take up lesser of this and take a calculation of 33%. We will do a problem after this, so don't worry about it. C is the excess, if any, by which the individual's total gift exceeds the amount of $200. So suppose $200 is here, your gift is for $600. So 200 here is there. 600 minus 200 is 400. So you just do that, okay? But we have to see which is the lesser of this. And if any balancing amount of gift which is balancing after you add up 1 and 2, A and B, that will be coming here. And in that case, you have to calculate and add up both, and that will be like 39%. Let's look at the problem. An individual with net income and taxable income equals to $300 makes eligible gift of $210, $210,000 during the year. How are you going to calculate the tax? If you are okay with, if you'll understand this, I'm sure it is all good, you know. So if we see first $200 amount will be calculated on 15%, right? See, if you see, A is 15% into A. So first $200 will be calculated on, see, I've already calculated for you. So first 15, well, we calculated in the last class, so it stayed back. So first 1500 was calculated, first 200 was calculated in 15%. So if you see, it is $30, okay? Any amount of charity, if it is first 200 has to be calculated at 15%, okay? Any amount. So if it is less than 200, then you have to calculate at 15% as well. So first 200 amount will be calculated at 15%. Now the second one says lesser of balancing amount. So now second one says lesser of total gift less $200. So what is the total gift? $200 less of 200. So what is the amount? 209, 800. Now it is saying lesser of it. So let's do the second one as well. What is it saying? Taxable income less 210,000, 371. So what is the taxable income, guys? Taxable income is 300,000. Okay. Less 210,000, 371. So what is the amount? 89,629. So which is the less out of both? 89,621, 629, right? Now first one we are okay. Now first one we know. Let me take this out so that at least we get an idea about it. Okay. Just let me take this out as well. Now 33%. Okay. Now B. So what is the first one of the B? Total gift less $200. So what is total gift less $200? So total gift is $210. $10,000 minus $200. So what is the amount balancing?
Minus
800. Now for B it has to be lesser of it, okay? Lesser of both, okay? So that is the first one. But in B there is another condition as well. Let's see what is the condition. It says taxable income minus 210,000 that's given for the year. Okay. So what is the taxable income? Taxable income is given as $3,000 out here. So $300,000 minus 210, 371, right?
Yeah.
Yeah. So what is the balance? 89,629, right? So out of this both, which is less, guys? 209 is less or 89,000 is less? Of course, 89,000 is less, right? So
Yeah.
89,629 times 33%, right? Because that's for the B. If you see here, 33% of the B. So that's something which is, so that's 89,000. What's the amount? 29,000.
1,578.
Okay, thanks, Michelle. Now, how about C? Now let's go to the C. Okay, so for C, it is 29%. Okay, what is the clause? The excess, if any, by which the individual total gift exceeds sum of 200. Oh, sorry. Okay. If you see the C, the excess, if any, by which the individual total gift exceeds the $200 plus the amount determined in B. So anything which is in excess. So $210 is for C. Okay. So what is the total amount of donation? $210. Okay. $10,000. Excess of this. So what is the amount for B and A? 89,629 amount, right?
Yeah.
So what is the amount? $120, 171, and at the rate of 29%. So that will be 34,850. See guys, for first one is 200, second one is you have to follow the formula. Anything in excess of $200 will be one way, and anything in excess of like 210,000, any net income or taxable income which is excess of $210,000. So which is lesser? 89,000 is lesser. So you calculate 33% and 89,000. Now there is a clause C which says anything in excess of the donation amount after adding up A and B. So after adding up A and B, adding and 89,000. Okay. So what is the excess amount? 120. So anything in excess amount will be calculated at 29%. So that is the amount. So now if you total it down, that will be the amount of donation you're going to pay for the year. So what is the amount? 30 plus 29,578 plus 34,850. Okay. And that is the amount. I think that's 64,458. So that's the amount of donation what you pay it during the year. I'm just going to make it more bigger so that you get an idea. So individual is gifting is eligible. Gift are 210,000. So you have to calculate the non-refundable tax credit what you get based on. So non-refundable tax credit you get is 64,458. You can imagine that a good amount of non-refundable tax credit. If you are donating anything, then you have to calculate in this way. And then you will get an idea. Okay. Yeah. So you have to just follow the formula. And this is the formula is given in Schedule 9. Guys, there will be an additional stuff which will be given if you're donating a property. So there will be capital gain and capital loss, which we will be seeing later on in the capital gain chapter. But yeah, so for now, we are just trying to understand the basics of it. So you cannot calculate the non-refundable tax credit on donation or charitable donation just on 15%. It has to be calculated in accordance with the brackets given. So you just straight away have this thing, and if you calculate in this way, you will be able to come across this amount. Okay. Now, general rules. Now, ideally, whatever is your net income, suppose your net income is $300, you are only eligible to make a charitable donation of 75% of your taxable income. So, what is the 75% of your taxable income, guys? What is 75% of your 300,000? It is 225,000, but they have made a donation of 210,000. So they are within the limit. So you can only net income. So 75% of your net income. You can donate 100% of your net income in the year when an individual or a taxpayer dies or a preceding year. Okay. And charitable donation will also have 25% of taxable capital gain and 25% of recapture of gift of capital property. Well, that will be for the later part. But then, yeah, this is the basic. This is unless you are into a big kind of capital property, and you are charitying, you are giving the charity. I'm sure nobody would be in this lot will be giving a charity of a capital property. Do you really think so? Is anybody given a capital property as a charity? Everybody's laughing.
Yeah, I need job.
We can take the charity, right?
Just taking the fact.
Yeah, we will take, but then they won't be able to be eligible because they won't be an eligible entity whom they can file. They can not even file a non-refundable tax credit because we are not eligible entity. Yeah, but yeah, so that's the charitable donation. But this is the way you calculate it. So there are different kind of calculation in different places, but you need to be very mindful about it. Even medical expenses, there is a little bit of different kind of calculation in medical expenses. Okay, not a very difficult one. It's an easy one, but I really wanted to show you in the thing. Okay. After this is not a very thing, except I think after medical expenses, disability is all good. Tuition credit is all good. Student CPP is all good. Transfer of credit is all good. I think you don't have to go too much of after this, like not too much of stress. I know you're getting too many calculation. You don't have to by heart this calculation, just to let you know. So don't get too much stress. You will get everything information handy. You get every information online. Every information will be there in your software.
Yeah.
So you just have to follow the rules, but you need to know how to put it right. That is important.
Yeah, takes time.
It takes time, right?
Yeah.
Yeah, another 10 more years to,
I know. Maybe I cannot do it this year.
this life or this year.
Oh my God, just forward to my accountant. No, just do it.
See,
Don't want a headache.
I'm a headache. Okay. I'm going to kill you. Okay. You still have 20 more minutes to be with me. Okay. So, yeah, at least for time before the break. So, yeah.
15 minutes.
No, so bad.
Advance.
Okay. I'll take 5 more minutes then. Okay. Let's do the medical thing and then let's wind up. Okay. And then we come back and do some rest of the part. But at least do the medical thing. Let me take you to, give me a second. Worksheet. Not the worksheet. Take it up. Medical. I want to take you to that. Okay. I'll stop the share. Now I'm hungry as well. Wow.
Okay.
Yeah, I just had a bread and a butter this morning. That's it.
Okay.
So yeah, I need to ask Kathy. Kathy, can you blend some panadas to me? Okay, so now we are talking about medical expenses. If you remember, if you see, we have calculated, we have tried understanding the donations and gift. Okay, medical expenses, medical expense for spouse, common law partner, and dependent children. Okay, we will understand what exactly is included in that first, and then we can try to do that. Okay. Now, medical expenses tax credit. There are many types of medical expenses which qualifies for credit. Stop yawning, Eleanor.
Not me. I just want to start, but somebody did it already.
Okay. Okay, there are many types of medical expenses which qualifies for credit. Okay. So there are different types of medical expenses. Service of authorized medical practitioner, dentist, registered nurses, prescribed drugs, medicaments, and other preparations of substances, prescription eyeglasses or contact lenses, preventive, diagnostic, and other laboratory work, dentures, premium to private health service plan, oxygen tents, cost of rehabilitative theory to adjust the speech or hearing losses, and there are a couple of others. So these are all included in the medical expenses. Now, what you have to do for calculation for that, we can add up all. If you see here, the medical expenses for self, common law partner, your dependent child, okay, who is born in 2002 or later. So if he's born in 2002, how old he will be now?
18.
18. So anybody who is 18 years or younger, okay, you can add up here. Okay. Now for elders, you're going to add up in a separate line. Now you have to add up all the amount of the medical expenses of yours, your spouse or common law partner, and your dependent child. Okay. So you have to add up in box that is 25. And then you have to deduct $2,352 or 3% of your 23,600. That is your income. Okay. So you have to deduct 23,600. Any amount which is on 23,600. That is what you're going to deduct. That's your individual net income for tax purposes. Whichever is less, you're going to put that amount here, and you will come across the medical expenses. If it is higher than any amount, okay, then you have to put 0, but enter whichever is less. Okay. And then you're going to mention here. Now, apart from that, you will have any other dependent as well, who will also try to claim the amount for medical expenses. If you have any other dependent, then you have to take up all the medical expenses for your dependent less 3% of the net income of the dependent or 2,350. The same way, whichever is less. You have to just add up this, and that will be your total medical expenses, what you can claim it. Let's look at the, now this is just I wanted to show you here, but let's look at the PowerPoint presentation and I'll show you how. Okay. General rule for medical is 15% of the eligible cost. Okay. That is something which we know. Now you have to reduce the amount as 3% of the net income or 2,352, whichever is less, reduced lesser of this. Okay. In that case, spouse and minor dependent, no additional reduction. Okay. You just have to add up everything. Now dependent over 18 years of age, but dependent has to be connected to you. Okay. So you have to calculate for each dependent. Now dependent medical expenses, and then you reduce that by 2,352 or 3% of dependent's income, whichever is less. So you just have to calculate that. So that will be the total medical expenses. Now let's have a look at this, guys. An individual with an income of greater than $100,000 and medical expenses of $5,000. His 20-year-old child has a medical expense of $10,000 and a net income of $9,000. So how do you calculate the medical expenses? Let's see. Let's have a look at it. Now, total medical okay. Now let me put it here and just show you. What is the taxpayer's expense? Medical expenses, spouse and his or his individual. His total is $5,000. Okay, $5,000. Now, maximum he can claim is 2,352 or 3% of his net income. Now, his net income is greater than $100,000. So 3% would be like higher amount, right? How much? $3,000? Because he's not given the exact amount. It's greater than 3%, 100,000. But even for 100,000, if you calculate 3%, it's going to be $3,000. So anyways, whichever is less. So you have to put 2,352. So that is going to be 2,648 if there is no dependent. But they say that he has his 20-year-old child, okay, who has medical expense of 10,000. So it's a dependent. 10,000 and a net income of
9,000.
You're welcome, Lai. So and a net income of okay. So now total is this. Now dependent is having a total medical expense of 10,000. Less 3% of his net income or 2,352. Now his net income is 9,000. So 3% of 9,000 is 270, right? So 100,000 less 270 is 9,730. So you add up this both, and this amount will be eligible non-refundable medical expenses. Okay, let's do that here. Now I'm going to and this. See, now total medical expenses like 5,000, right? As we know, it's given it in the problem. Less 2,352 because 3% is higher. Now, dependent expenses and 10,000 and dependent expenses 270 because 9,000 3% is this. And there is another schedule, guys. For this also, there is a schedule which you need to refer to it. And if you refer to the schedule, so you have to refer to the worksheet. So if you complete the worksheet, you can get the dependent information. So dependent information, total medical expense. How much is the total medical expenses, guys? 10,000. Okay. And reduce it by 3% of 9,000, 3% of the net income or 2,300, whichever is less. Because 3% of his net income is lesser, so you reduce it by 270. And so total amount for dependent is 9,730. So medical expenses for dependent taxpayer. Yeah. So that is something which you can claim it. See, so that's so good, you know, you can claim. So you can claim like around $1,000 in like almost like $2,000, 1,857, right? So that reduces your tax liability to a good amount. So that's what it is for the medical expenses. But you need to make sure what is included in the medical expenses. Okay, as I mentioned it.
Yeah, if it's over the counter, it's not counted.
Yeah, so there are a list of stuff which has to be counted. So which is not that everything is counted. So do not get overwhelmed with that. Wow, I can claim every medical expenses. Not really. Okay. So they are also smart in telling you that okay.
Yeah, it should be prescription.
They are very smart to tell you that don't get too happy. Right? Yeah. Okay. Yeah.
Happy.
Like Eleanor is getting happy. Eleanor, can we continue with disability as well? Let's finish one disability.
Of
And then I will.
course. You have
Okay.
10 minutes, ma'am.
Okay. Thank you so much. See, you are giving me time. You guys have become like,
Because you're hungry, you said.
I get, no, not, I can still go for hour if you want to.
Okay, fasting. We can do it.
Okay. I can do it. Yeah. Okay. You sure?
Yeah.
You can have some coconut water in Mexico and then do it. I know.
Oh, nice. I remember Mexico.
Oh God, don't cry. I'm here.
I feel like very rich.
You are rich,
For 10 days or 2 weeks, I think.
right? Yeah, you felt like as if what's happening in my life.
It's like a dream.
I wish I could just live here forever, enjoying,
Yeah.
I know. But yeah, you are motivating me as well. And next year, I think Mexico is going to be loaded with people.
Yeah.
Okay, let's go further. Disability amount. So there are people who are able to claim the disability credit too, and it is equal to the amount of 8,416 and 15% on that. So you can claim a disability credit of 1,262. Okay. Now, disability must be severe and prolonged, significantly restrict basic living activities, a continuous period of at least 12 months. Okay. So to qualify for disability credit, the impairment must be there that there is a marked restriction of activities of daily living or significant restriction in more than one activity. Okay. In addition, it must have lasted or be expected to last for 12 months. In general, a medical doctor, nurse practitioner, or optometrist must certified and form 20T2201 that severe physical or mental impairment exists if you want to claim that disability credit. And even there is an income tax act that tries to make the condition for qualifying for this credit in terms of it points out that individually clearly qualifies if they're blind. They also qualify if 90% of the time they cannot perform or take extra time or amount of time to perform the basic activity of daily living. This includes mental function necessary for everyday life, feeding oneself or dressing oneself, speaking such that an individual can be understood in a quiet setting by someone familiar with the individual, hearing such that individual can in quiet setting understand someone familiar with the individual, bladder function or walking problem. So if they are all having a problem, they can claim disability credit, okay, as a non-refundable tax credit. Now, person who are 18 years or above, they can claim $12,162. There is no income tax required. No claim if more than 10,000 for full-time attendant or cost of nursing home are claimed. Okay. And if an individual is claiming, if the taxpayer is claiming a disability credit for somebody who's dependent or a spouse or something, in that case, that amount can be transferred to the individual taxpayer, okay? Because disabled person is anyways doesn't have much of sense, right? Much of understanding, and not you going to use that money for that for himself or herself. So in that case, they can qualify to claim the disability credit. However, if the person is under 18 years or old, the amount of disability credit can be claimed is additional of 4,900 and like they can claim the amount is 4,909. I'm not able to. Okay, so the base for supplement is $4,909, providing a total maximum credit for disabled minor is 909. It's around $2,000. Yeah. So this is what combined provides is this. So they can even claim this amount additional of this. The 4,900 is reduced by the deducted cost in excess of 2,875 if the child care cost is deducted, or the amount deducted under the disability support deduction or attendant care amount claim of the medical expenses. So for example, now there is a supplement of this amount for a disabled child who is under the age of 18. For 2019, the base supplement as mentioned is 4,909, providing a total maximum credit for a disabled minor is 1,999. That is 8,416 as mentioned before, or it's mentioned here, plus $4,909. However, supplement amount of this is reduced by the total of the amount paid for attendant care or supervision in excess of 2,875. If anything excess paid, then the amount of disability credit, refundable credit will be reduced. So in that case, you need to be mindful about it that they cannot have an extra amount of that. So this means one such cost reaches 7,784. That is 4,909 plus 2,875 for the years. The supplement for the child is completely eliminated. Okay. So in this case, you cannot go an exceeding amount of disability credit. Be very careful about it. You don't try to be more greedy and asking for more. That is the amount of disability credit. 15% for the normal person, 15% of 8,000, and for minor, it is a combined provides of 19,900, minor plus a major, yeah. Or if a minor, which is supplemented additional amount of 4,909 amount, but and even an additional amount of 2,007 for the supervision or the attendant amount. But in excess of anything, it will be reducing your disability credit amount. Anybody? Sorry, I mean, this is not the right thing to ask. Okay, fine, go ahead. Okay, guys, next is a tuition credit. I'll put a hold on now, and we discuss the tuition credit, interest on student loan, CPP, EI, political contribution, labor fund, refundable. Okay, refundable is part of your assignments. Okay, so we'll be discussing this and doing some problems after we come back from lunch. Okay, guys, too many credits, so too much of mind blocked with that, and I'm hungry now.
Okay.
So we come back at 1, okay, guys?
Okay.
Okay, ma'am. Okay.
Madam. No. Maybe he take it.